Let me start this session. Why we require this session? So we want to create an awareness on how to reduce fixed asset risk before they become a business risk. Lot of organizations, they buy assets, keep spending, they don't track, they lose a lot of assets, they lose the money at the end of that. So here we are going to discuss about principles, reality and mitigation plan to identify risk early, improve accuracy and compliance, strengthen controls, and project value driven growth. So let me introduce what we are going to discuss today. People make big investment in assets, manufacturing companies, machineries, IT equipments. As of most organization invest heavily on assets, but rarely they manage these assets. So, as a result, organization commonly experience the following 6 points. Purchases are untracked. Some invoices accounted, some invoice not accounted, some are put in revenue expenditure invoice put into fixed asset. This all confusion happens over a period of time. So asset purchase but not properly tracked. So whether it is going to be a fixed asset or it's going to be a revenue expenditure. So people don't plan on this. There are a lot of confusion on this. Next, transfer documents not accounted or not documented, where the asset has moved in, where the asset is gone, whom we have handed over the asset. Nobody tracks them. And depreciation, another case, like asset disappears, like asset is scrapped, disposed, absolute, thrown out, but still it is in a FAR which calculate depreciation. Exactly, if you see that, that will be a chunk amount where you are calculating depreciation for not available assets. Audit observations. Most auditor raises a lot of observation during every audit cycle. Fixed asset has not been verified, a fixed asset register not updated, additions are not properly entered, quantity is not properly given in the FAR. So a lot of points have been raised here. Then another important thing is repeated purchase. Organization purchase an asset which are lying there for want of some repair or small spare part maintenance. People tend to instead of go buy new assets. So if they have spent a small amount for service or repair, then they could have put that asset to reuse, where you can have stopped purchase huge on capex. Data drift. Another important point is that asset information becomes inaccurate over a period of time. What happens here is asset, now when Ali is given a task to manage fixed asset, I'll write asset with proper information. Some other person takes over, he writes just plant and machinery, purchase of plant and machinery, 10 lakh rupees. So asset data drifts over a period of time. So fundamental principle here is, if you cannot identify it, verify it, track it, you cannot manage the asset. So we are going to discuss today on 4 pillars that help organization to mitigate fixed asset risk over a period of time. That is, first on fixed asset register, the foundation of asset control and financial accuracy is fixed asset register. Second one, physical verification, checking asset existence, location wise, condition wise, owner wise, building wise. This will happen during physical verification. Third one is a unique scannable identity for each and every single asset, that is QR code or a barcode. So this will help you to identify asset. When you go year on year, you can have those information. That is, assets are visible, assets are trackable. Fourth pillar of any organization is asset management software. Centralized control, real-time visibility to track entire life cycle of the assets. See, first pillar I'm going to discuss on fixed asset register. What it holds and why it is quietly degrade over a period of time. Typical FAR contains identification details of asset. Mostly asset code are not given initial stage. Later when you do fixed asset tracking, they give an asset code. So whenever you set up a fixed asset register, asset code has to be properly given, asset name has to be written properly, description, entire details of the asset, category type is nothing but categorization, what category of asset is it, whether it is a laptop, desktop, printer, chair, table. This will help you to get proper MIS down the line over a period of years. Next important factor is financial, proper value capturing, capitalization date, determining the useful life of the asset, depreciation method, SLM or WDV method, and properly connecting it with the net book value over the period. What was the depreciation calculated? What is the current net book value? Procurement detail. This most of the people leave this as and when invoice number is not captured. So you have to take care of capturing the invoice number, date of purchase, which vendor you have purchased, what are the quantities, what is the quantity of asset, one number or 10 numbers. This will give you an entire how many assets are there in our organization. Then location and ownership mapping. Every register should have which asset purchase for which branch, which department, where it is going to lie, and who is the owner of the asset. Then physical details of the asset, like you have to track serial number, manufacturer, model number, and most important is condition. Is every FAR should contain working or not working, lying idle. This will help to manage a proper fixed asset register. Current common issues found in FAR. What I have seen over a period of time, FAR is rarely broken in on day one itself. Like not entered, proper details are not given. Just they start writing purchase of plant and machinery. And missing information is so heavy that FAR cannot be managed at all properly. Like no serial number, no location, no custodian, no department. People don't know where it has gone. And inconsistent descriptions. So laptop is written in different names, laptop, notebook, laptop, nettop, a lot of different names are given. So every time, whenever you take a MIS, they will not proper laptop names because you have not written proper laptop names. You cannot take a proper count of the assets. Asset disposed assets still lies in the register. This is what I was talking to you previously, ghost asset. So a lot of asset has been scrapped, is damaged. People still calculate depreciation without knowing asset. Here, finance team does not take responsibility to check asset is disposed, nor the department inform them asset is disposed. Please kindly remove from the register. So here there is no coordination how to manage a fixed asset. Most financial errors happen here. Wrong value is captured. Instead of 10,000 rupees, they might put add 10 by mistake. 1 lakh is written, or instead of 1 lakh, 10 is reduced, 10,000 is written. After due diligence, they find out and change again. They don't see in the initial state what is the life of asset going to be next 3 years or 5 years. They put it in some group or some life where they start calculating. When they come to know, they start changing it. Initial stage, they don't have to, they don't practice this. Depreciation calculate even after, because it is going to be Excel, even after the life is over, they still calculate the depreciation. On the first mitigation strategy, fixing the fixed asset register. First, FAR cleanup, standardize on the name, nomenclatures, categorization of assets, remove duplicates and obsolete records from the register, do a proper write-off with approval. Cleaning of register is something you have to have a proper nomenclatures. Some people will write computer in a short, I can as example. Some will write system, some will write CPU, some will write computer system. Single asset have different names. First, you have to make a proper, give a standard proper nomenclatures. CPU, monitor, printer. So where tomorrow, if you want to take any quantity wise report or MIS, I will know how many laptops are there. If your register is clean, names are proper, you can get any report from your fixed asset register. Then asset coding structure. A meaningful unique code per asset has to be given, like asset name, asset number. It starts, you have a SAP ID, you can write a FA ID. So anything you can give a asset coding pattern, which as per your company policy or standard, you can make a unique asset coding structure. Third is periodic review. Every quarter, every half yearly, you review the asset register, what all happened, how many are transferred, how many are disposed, and do it properly every quarter and reconcile this every year against physical verification of assets. Once physical verification is done, update the details, whether it is available, missing, whatever, you do it within 48 hours. Then assigning to the ownership. So laptops can be given to the respective owners. Production people can be allotted with the respective asset to them. So every asset carries three mandatory fields: location, department, and custodian name. These are the people who are accountable. If accountability is given, it will never fails. Every fixed asset register will be properly managed. Here, key message what I want to give you is a poor FAR creates poor decision in your organization. A clean, good FAR creates visibility of assets, control of assets, compliance for the management and to audits, and confidence in organization that I whatever the assets are there, I met it is available for me any point of time. So I think this 4 points where this is the mitigation strategy for your fixed asset register. So next pillar 2 is of the fixed assets is physical verification. You can trust your assets will be there, but surely if you verify, you are more confident that assets are available in the physically as well as books. What is physical verification? As I told you earlier, physical verification is a process of validating whether the assets are recorded in FAR actually exist physically. It is a bridge between the paper reality and your ground reality. This helps lot of organization to understand what they have, where it is located, how which condition it is lying. It confirms 4 key points. It confirms the existence of asset. Does the asset physically exist? It is available or not available? So you come to know on that. Then location, is the asset at the recorded branch or department or floor or work area or workstation? If you have, then assets are tracked easily. Then another point is condition. Is it working condition, lying idle, or it is damaged condition, or repair condition, or it is obsolete? So once you have this details recorded during physical verification, you can plan or decide what should I do with the damaged asset, what should I do under repair assets, what should I do with the obsolete asset. So you can take a statistics and you can rework on that damaged asset, remove from books as well as physical. Under repair asset, purchase some spares, were put to use again. Obsolete assets, see whether you can dispose at some cost and bring that money into your organization. So all this when you do physical verification, you have to take a note on the condition of the asset. Custodian, who is the person going to take responsibility? Usually in the organizations, laptop is given to a person, employee. He is the person who takes care of laptop. Other equipments, other machinery, production equipment, production manager, admin assets, all this has to be given a custodian. So tomorrow each person is responsible for the assets. So when you do complete physical verification, you have to check all these assets. Existence of asset is there or not, location is recorded or not, condition is done or not, then custodian. So all this will help you to manage a good fixed assets. Current reality, what fixed audit typically reveals. Whenever you have an audit, it reveals more information on your fixed assets. Many organizations assume it is in FAR. The details are in FAR. It exists. Don't worry. Physically, it will be available. Why should I worry? But reality is the thing always not true. You miss lot of assets. First, so you don't have, because you don't have proper tracking system, you lose lot of assets. We, as per our experience, typical asset categories like laptops, computers, missing account for about nearly 8 to 15% of whole register. So laptops are given to the person, he has not returned it back, or he has returned it back, not put to use, it is kept somewhere in the cupboard. Then whenever we track, it is lying there unused, become obsolete. So these are the area where 58 to 15% of value is missing in your asset register. And next is more important is furniture fixtures. The 5 chairs, tables, small items, cupboards. This all get damaged over a period of time. But because you have not repaired it or not used it properly, it accounts to about loss of your revenue. Loss of your fixed asset is about 5 to 10% of your FAR value, gross value, you can say. Then lab and scientific is 3 to 8% because mostly these are all under the control of a person or a room. Usually it does not happen here. So still small components get missed here. You have to have that authority. Vehicles 1 to 3, lot of spare parts, repairs happen here that get missed. Like tires are replaced normally when it is good because owner doesn't take care of that. Machinery and plant equipment. This is where area you lose about 2 to 6%, mostly on maintenance. Asset goes for maintenance, which does not come back over a period of time. Here we lose a lot of money. Asset is given, sent to a service center. Service center person is not replied or returned back to you. So you lose good amount of here the value. Common finding what we have seen over a period of time. Common finding during the physical verification. Missing assets recorded in FAR but not physically found. So nobody takes care and try to remove it from the assets, FAR. Excess assets physically available but not recorded in FAR. This is the area of concern. How in your organization, without your knowledge, it is lying in your organization. Why it is not recorded? Mostly here, what happens is people write this invoice and revenue expenditure and do not account it in fixed assets. Here the problem comes as for the excess asset. So over a period of time, I have seen a lot of excess assets in organization. Whenever we go back and see, they say, no, that particular ceiling fan is purchased in expense account. Rest of the ceiling fan is purchased in fixed assets. So this is the confusion people have when the ceiling fan is being given as a fixed asset, whether you buy any point of time, you have to account it in your fixed asset register. It cannot happen one part of ceiling fan writing it revenue expenditure and other part of ceiling fan writing as a FAR, fixed asset register. So somebody has to genuinely look at this. There's a lot of problem even in furniture. We purchase plastic chairs, sir. We will not account it as a fixed asset, but during physical verification, those assets are available. And wrong location. So asset assigned to Chennai, but asset is lying in Bangalore. This happens because proper movements have not happened, proper documentation has not written. If you have an application, it is not properly recorded. So this is area of concern where people does not know how this asset come into branch. So you have to do a transfer whenever you move the assets. Idle assets not utilized for more months or years. See, this is a typical case what I have seen in a lot of organization, like asset purchased and they have purchased 100 laptops. Out of 50 laptops, they have given it to the person, allotted to the person, a custodian. Balance 50 laptops, they kept it in the cupboard. The cupboard was locked, not used not opened for years. Then when we went for physical verification, we opened the cupboard and saw 50 laptops kept in. And it was lying idle. Nobody has used over for more than 10 months or 12 months. So we don't know. When we told them, by the time it was obsolete. More than each laptop costed about 50,000-60,000 rupees. And 50 laptops are obsolete and not put to use for over a period. This area if you want to manage proper fixed asset, you have to take care on this. Damaged assets. Some assets are damaged, no longer operational, still shown as an active asset because physical verification is not done over a period of time. So damaged assets records are not updated. So assets are still active, but it is not put to use. No revenue is generated from the fixed asset. Let's say it's going to be in a hospital, healthcare sector, it's an ECG machine. It is not used or put as a damage, not used over a period of time. Your billing is not done on that particular ECG machine. So another next is incorrect quantities. People are not bothered in FAR to write how many chairs purchased, how many laptop purchased. They just write purchase of quantity 20 laptops. But there should be a column in a FAR where 20 numbers are put. Tomorrow you'll know which 20 numbers. So FAR, you have to create this 20 line items. This will help you in tracking. When you do a physical verification, you will know that same 20 laptops available or 20 chairs are available. Again, pillar 2, we are going to discuss mitigation here, physical verification, frequency and framework. See how you are going to do a verification, what all the category of asset you have to add in the verification. It is going to be a high value asset above 5 lakhs. You have to do physical verification quarterly by method of QR label, QR scan through mobile apps. So you can scan the IT assets, laptop. You can do half yearly. So where you will most of this, why we say half yearly is semi-annual is most of the laptops is given to respective owners. So you know properly, you maintain properly. So again, it can be through a QR scan or through mobile QR label or mobile apps. So QR label is affixed, you can scan it. Then furniture fixture, you can do this annually by QR and mobile apps. Vehicles, annually verification plus logbook. Every vehicle which is an organization, they maintain a logbook where they write down what all happened during the day, where it went, where it come from, where it is put up. All this they maintain as a logbook. Here, if you have a QR label, you can scan it. You can do it from a mobile apps. Lab and scientific equipment, again, it is going to be a half yearly. again scanning with mobile apps. Idle and inactive assets. When you do the physical verification, only on identification, you mark the status condition, report the condition. Mark the status whether it's idle or inactive asset. So whenever the authority sees that, they take some action, remove this or scrap this or repair this, then they can take a decision. Here I want to drive one key message to you all. Physical verification transform assumptions into fact. People are thinking earlier, all assets are there. Nobody will take it out. Nobody will damage it. Nobody will steal it. No, all are myths. Fact is, if you do a proper fixed asset verification, it is available, then it is a reality for you. What is the risk in not conducting physical verification? So a lot of organizations think verification is a simple task. I will do it, or we have to look at the asset, go. No, it is not that. Now I'm going to explain risk in not conducting a physical verification. Asset loss risk. Missing asset remain undetected. So there is a case I'll tell you. I was doing a verification, physical verification now, garment industry, garment manufacturing unit. We were fixing a QR label on that assets, and when we came back, we told all the superior that this is the label, this is the ID. One day, we went for a verification. The supervisor wanted to just check whether Levanter has done the work properly or not. In this angle, I could see asset. There is a return on the asset, rental asset. So I asked, how come rental asset has come in? No, yeah, we get a project, we bring somewhere. Boss, this is your assets. I have fixed QR label on this. How it is rental, you tell me. It was a surprising, it was eye-opener for that organization. They were paying rent for their own sewing machine. Because small 10 rupees, 15 rupees QR code saved lot of money. That save was like whenever they get a project of that is shirts or pants to be made, so they buy 50 to 60 machines from the outside. They rent, they hire. When they hire, they just pay 800 rupees per sewing machine into 50. Whenever the organization then on the investigation, they saw that, then they calculated what happened was, whatever the order that comes, supervisor will remove 50 sewing machine from the A branch for service, and they will just put a tag rental, send it to B factory as a rental. This was the problem, because no proper supervision was there, no proper control was there on the fixed asset. The company ended paying 800 rupees per sewing machine into 30 days, 50 days, 60 days, into about nearly about 100 sewing machine. What was the cost drained out? Just then unauthorized asset removal goes unnoticed, as I told you, before the theft risk time is over. Another organizations, I'll say you, because they did not conduct proper vouchers tracking, they spent about on a vehicle every month 40 to 50,000 rupees. Service was done by the driver. The invoice were given to the owner, that is accounts department. Accounts department paid them, and owner does not know. When they found out, 4,000 rupees every week into 4 weeks, money was drained out for service. Then capital expenditure wastage is more here. They have laptops kept under their belt or departments, not put to use. They keep buying new assets. So there is a loss here. You have to take care of this also. Financial mismanagement risk. Asset value becomes inaccurate. Like example, One laptop I purchased for 40,000, another I buy for 50,000, 60,000. Whatever the invoice comes, 4 lakhs divided by 25 laptops. But one type of laptop costs 30,000, another type of laptop costs 35,000, which they have not returned it properly. This what happens is they not get a exact asset value. Depreciation calculation becomes inaccurate when Ali is given the task. Ali will calculate an SLM method. Somebody joins after 2 years. He does not see, because it's a Excel or a spreadsheet, he does not see what it is, whether what calculation he has done. I will start, another person will start in his own terminology, where he'll start calculating WDV method. So here it becomes completely incorrect. Audit observations lead to reworking, requalification of the books. Audit spends more time correcting this data. So risk for not doing physical verification. To avoid this, you can have a lot of things in place, or compliance can be brought into place. So here, mitigation strategy for annual physical verification. This physical verification has to be conducted religiously, whatever it matters. Conduct verification across all locations. No location should be exempted. I will not do warehouse. I will not do stores. No, everything do it. If the asset is not there also, please do it. So conduct physical verification of all locations. Involve department heads. Where department heads get involved, everything goes smoothly, and you can also assign accountability for next future. So where assets, whenever you want reports, you can take in reports. Conduct surprise verification for high risk departments and equipment. Like you spend on lot of research, lot of assets are purchased. You have to see quarterly or half yearly you start doing. And QR code based verification. Replace paper or manual everything to QR code. QR code is a code which can be printed, designed easily, and you can print this on the barcode printer and affix this on the asset. So people don't have to keep writing with the pen or the pen or paper and affix the labels. So you can replace them, and good QR label can be affixed. There are label more than 10 rupees, 100 rupees, whenever life will come out of your asset. Then field team can scan QR codes. Mobile apps are there nowadays, so you don't have to buy expensive scanners. Just go scan the QR codes by way of mobile apps. So it immediately gives you a data, stamps the time, what time you have verified this, and also it captures, you can capture the image of the asset. So this will help you in future, or you can attach the image also. Real-time variance report can be generated. So you will know what all the assets missing currently. So you can start taking stock of the situation or start asking people. So now you can generate a variance report, missing asset report, asset in FAR not found physically, what is the value of the asset, whether it's worth checking, or you can, if it's going to be a small value, you can remove it. So if it is a good heavy value, check why the asset is missed. So what is the impact on your financials? You can derive from that. Excess asset report. This is an area of concern where you have to see how the asset has come in or properly accounted, at least now, with whatever value you like. Location wise report. So location, Chennai branch, what all the asset missed, what all the Chennai asset available in Bangalore has to be reconciled, and if it is going to be moved, transfer it. If it is going to be pulled back, given back, give it back to the branch, and then asset register or maintenance asset, all will be proper. Quantity variance report, like 5 numbers, you have purchased 5 numbers, only 2 are available. When you go back to your record and see, it is not, by mistake I have put 5 there, it is only 2. So this all has to be cross-checked and corrected by time. Reconciliation, update FAR based on verified physical finding. So in fixed asset register, update this information where next audit it will help you. Write off the genuine missing, really missing or damaged assets with appropriate management approvals. Do that as a early case. So next audit, it is not available in FAR. Over a period of time, I have seen register every year, I find a new register from the organization. This is a problem. Whatever we have worked, created a FAR given to them, they don't use it, they create their own FAR. In this regard, what happened is reconciliation become difficult. So whatever we have done, you have to add the value here, update the FAR based on verified physical finding, genuine asset, remove the genuine assets, capitalize newly discovered, that is excess asset. After investigation, why this asset has not been added in FAR, check your invoices, check or might have been given, donation might have been given by some people. So record it properly. Pillar 3, asset tagging. Give every asset a unique identity. So you have to, every person, every human being in this world or anywhere in India, they have been given an Aadhaar card in India and ration card, voter ID, bank account has a image, photograph of yours, and with all the information. Different things are given to a human being. So same asset tagging should be in that case. E-assets has to be tagged properly with all the information. So tomorrow verification becomes easier. Current reality, untagged assets with no label, no identifier. So people are not bothered to inform the authority this label has been removed or fallen. So where you can reprint. That goes on, it goes out of the system. And when it comes for verification, it becomes too hard to find the asset. And whenever some asset labels are damaged or faded, still you have to print that and reaffix the labels. Multiple overlapping number system. This is a criteria where finance will have one ID, IT team will have an ID, maintenance department will have one ID, everyone. So you bring everything in one table and create one single tag for that asset. Just as of Aadhaar card today. Then paper tags, do not use paper tags, use everything for as like stickable format with proper adhesive, put that. The result of this, finding a specific asset becomes faster and where you will know how the asset can be verified. Then what type of tags, when to use? QR code for office equipments, IT, furniture, general use assets. Use a QR code, which is a low cost, does not do much this thing. Barcode, again, it is a low cost for high value asset, retail style assets tracking. So you can put in a QR code or a barcode. RFID, large campuses, bulk scanning where it is required. You can use RFID scanners, RFID tags, or RFID wireless scanner can be given. NFC tag, IT asset, morely on IT assets. So it can scan in short range, not in long range. Cost is also medium here. Benefits of tagging, faster audits within hours, not months or weeks. If it is QR coded, you can do faster scanning. Location and custodian always known, who is the owner of the asset, which location supposed to be. Asset tags deter informal movements and loss. Real-time identification, you don't have to keep searching. Every asset has a clear owner when you do the tagging. Key message what I want to give you is, if an asset has no identity, it has no accountability. So each asset can be QR tag for everything. Then risk of untagged assets. So asset get misplaced or no responsibility. It takes longer audit cycle. So auditor keeps spending most of time identifying the assets. By the time the cost also increases, manpower increases. So see all assets have been tagged. Then accountability issue. Nobody knows or nobody hold responsible. I don't know if I go and ask why these assets are not available. I don't know, sir. I am a new person here. So whenever a person come in or joins, they have to take charge of the asset also. Then mitigation strategy, QR code tagging system, assign every asset with a unique QR code link to the FAR records also, physical with FAR. So all the QR code or identification ID has to be recorded in your FAR. QR code can contain asset ID, name of the asset, department, location, anything as you wish. So tomorrow, verification, identification easier. Suitable for manufacturing facilities, large campuses, mostly healthcare and offices. Mobile apps, there are a lot of mobile apps developed here nowadays where you can just download it and go scan the QR codes, your verification gets completed. Then, benefits of tagging, faster audits, better control, reduce asset loss because each laptop, if you take not less than 40,000 rupees, each healthcare, if you take a syringe pump, not less than 15,000 rupees. So you have to account everything. So better control it before it get lost. Reduce asset losses always. See whether asset which are lying idle should be repaired or put to use properly. Real-time identification should happen. Improve accountability, like give the ownership of the asset to the respective people so everything is accounted where tracking is easier. Fourth pillar is asset management software, the control tower of everything. First, what happens when you buy a software? First year, clean, well structured, and one person maintained carefully. Next year, when it comes, second parallel version starts and another location starts. They maintain separately. HO maintains separately. Minor differences happen. Third, original owner leaves the organization. Then version starts. Different versions comes in. That is, CFO asks for report. He gets 3 versions of report. So problem is because it's not properly maintained. Now we are in problem. Reconciliation takes place because verification has not happened properly. Nobody there to explain the gaps, why there is a problem. Then risk, why Excel? Excel has a root cause for the problem. So no single source of data when you are on Excel based asset management. So branches will maintain, head office finance department maintains. Silent formula and depreciation errors. Silent formula, they don't know, they do some formula in Excel equal to question mark, whatever it is, something is there, error starts happening. Because there is no accountability, no audit trail, who has changed what, nobody knows it. No control over edit or deletions here. Stale data drives wrong reports. Asset knowledge leaves when the person goes. First person who takes care, he does everything properly. Whenever he loses, next person does not acquire the knowledge and everything goes here haywire. Management, whenever can't answer where it is, who is using it, what condition is, under warranty or not, nobody knows. Insurance is taken, no. So for this, what does a good asset management software does? Sees everything. Excel only see what it enters. Last, centralized repository is maintained in centralized software. One system, one record, all location, role-based access. So a good asset management software does. It tracks life cycle management from purchase, put to use, allocate to the person, transfer if required, verification done properly, maintenance is done, repairs are done, disposal is done properly. So entire life cycle tracking is done in the application. Real-time dashboard. So whenever you want, you can see what is the count of assets, what type of value of assets I have, who are the custodian of the assets, details of the asset, verification started and completed or not, all this. Assets are properly utilized. Yes, you can see this in the dashboard. And when you get automated alert through a good software, warranty tracking is maintained properly. Once the warranty is over, you will know whether it's a 1 year warranty or 2 year warranty. If it is 1 year warranty, when it is over, this all move to AMC. When AMC start, whether after 1 year again renewal happens or not, insurance expiry notifications are given to you. A good software gives you a verification due dates. This verification has to start this quarter, next quarter. All this will be available in a good software. Mobile application, as I told you, there are a lot of application, good mobile application, QR scanning, or there's a barcode scanning, capturing image, capturing the condition of assets, and full audit trail to be recorded. Every addition or transfer, disposal, lock time with the user, everything is recorded. Software, how to select a software? The software must have unique code generation, calculation of depreciation, SLM method, WDV method, Companies Act, Income Tax Act, as per Indian GAAP system. Then ERP integration the application with your financial ERP or SAP, Oracle, Ramco, whatever you can plan this. Mobile based verification. Tomorrow you want to do a physical verification, just take a mobile and capture the QR code. If the software is role based, so you can give role based person, whoever it is, he can see only A branch, another person he can see branch, B branch. As a super user, I can see all the branches. The software should contain bulk import or export options, full audit trail control, warranty tracking, AMC tracking, all this a good software should have. See, cost of inaction, not controlling the fixed asset register. Poor control is not free for you. It has a cost to you. It bleeds every year for the organization. Asset controls as an investment to the organization. It is not an overhead. Rupees 8 to 12 recovered from every 1 rupee spent on the asset management control. Again, I repeat here, rupees 8 to 12 recovered from rupee 1 spent on an asset management control. Whatever you spend on a repair or maintenance of asset, because it is properly used in the production or in the area where it is used, you gain 8 to 12 rupees. This avoided losses, unnecessary procurement, and unnecessary audit cost for you. Risk area and typical annual cost of poor control of asset management. Risk area, unnecessary asset purchase, which accounts annually for 3 to 8%. Ghost asset, as I told you, it is around 2 to 5% of your gross block. Because audits are not completed on time, extended audit and reconciliation, you have to spend more 5 to 10 lakhs per cycle. Insurance on non-existing assets, assets which are being ghost assets, which are not exist, you still keep paying insurance on this. So premium, you keep paying premium. This can be avoided if you take a full care of that. And stolen or missing asset, undeducted assets, 1 to 4% of asset base, total gross block. These are all things I have seen over a period of time. Lot of organization, whenever we give the report and tell them these are the assets stolen or missing, they take care less. but over a period of, I've seen people taking it seriously nowadays. Then I have explained to you the the four pillars of fixed asset risk mitigation. No single pillar sufficient on its own. Everything is collaborated and work each phase wise. Clean FAR, financial accuracy will come to you. Audit readiness will be there. No ghost asset exists in your register. When it is going to be physical verification, ground truth, you will come to know facts, you will know, you will be not be in myths. Oh, assets are there. So now you will get a ground reality report. CapEx, you can control the CapEx. Accurate depreciation can be calculated. Fewer losses will start happening. So you gain complete control of the fixed asset. QR coding or barcoding or RFID tagging, unique identity is given, accountability happens here, faster audits are done, then thefts are controlled over a period of time. Management software, having a management fixed asset management software, you get single source of truth. Wherever you sit, you don't have to depend on the data. A person will give, B person will give, C person will give. No. So you can log in and see the reality, what asset exists in your software. Real-time visibility, you can cross-check physically, and or because it is automated, alerts are given, so your maintenance schedules have been tracked, your service is being tracked, what all the asset gone for service can be tracked here. So organization don't lose money because they lack assets. They lose money because they lack visibility and control over them. This is a very clear point. It helps. Think about it. This will help you. And if you educate your employees, then everyone will come into the collaboration. So then, conclusion, I'll just clean FAR as I told you, verification, a complete fixed asset risk management framework, what I presented to you. So here I conclude this, and thank you for giving a patient hearing for this. If you have any questions, you can just type in pillar